This question is from Massa from Vancouver. Massa asks, how can I start with almost no capital, especially in the Vancouver market? However, I got great credit score and I got $0 in debt. So that sounds like a great profile, but there's no capital to invest. So Massa, how do we get you started in real estate? Well, this is a great example of real estate no money down strategy. And the best real estate no money down strategy is to bring on a partner that puts up the money. Real estate's always going to cost you money to buy, but the no money down says it's not your money, it's somebody else's money. So that's the key here, is to try and get somebody else on board that's going to be the money partner. You're going to be the active investor and somebody else will be the passive investor. And you bring somebody on board to add the value of the money and you'll add additional value. Now, a lot of people say, well, why would somebody just give me money? The answer is that you're going to add some sort of value. Okay, you got to add value to the deal. You always have to add value to something. So there's so many ways you can add value to a real estate investing deal. Money is what we always think about because money's top of mind for most people. But there's so many other things that are required for a successful real estate deal to happen. Whether it's a transactional deal like a flipping deal, or if it's a relationship deal like an income property that you're going to have for 5 or 10 years. There's so many pieces of that value. So let me maybe write something down here to get you started. See what I can do for you. So how do we have value? How do we add value? Okay, I'm going to put this T-chart here. You have active investor, and you're going to have the passive investor, okay? Passive investor is the money partner in this scenario. So you need to find a passive investor. You need to find a money partner. So the question is, what value are you going to add to give someone the incentive to be your money partner? So for example, what types of value can we do? We can have value of finding the properties, managing. You might have your team built, your full team, and this person doesn't have their team built. You might have a system. Okay, you might know how to find properties, how to fund properties, how to get the financing with the down payment. So you might have a system that they don't have. And this is actually really common for our members. Our members will have a system, a Keyspire system they'll use, and then money partners don't have the system, so they'll be able to raise money that way. You have the team, you might be able to manage the property. You might have a special list, a buyer's list. Okay, I remember when I was first starting real estate, one of the things I did, I built a buyers and sellers list, and I would take that sellers list and I'd be able to match that with joint venture money partners because they didn't have the list. I had the group of people that are looking to sell. So what value is it that you are going to add into the system? What value do you bring? And you're going to bring one side of the equation, and the passive or money partner is going to bring the other side of the equation. Okay, and now you said, especially in the Vancouver market. Well, this works anywhere. It works anywhere in Canada and the US, but the point is you need to have a property. So often what you'll do is you'll be the person that finds the property, okay? So you'll find the property. So you've got to be able to find good cash flowing properties. You'll get the property under contract. So you'll put in an offer with a 30 or 60-day conditional period, and then you'll be able to get your money partners in to partner with you. You've got that property locked up, you've got it under contract, and you own that property. You bring that opportunity to your money partners, and your money partners will be able to get involved fully passively and get a return on investment. So you got to take a look and do the calculation of what the return on investment is of the property. You find the property, you get it under contract, you have a return on investment. Say you can find a property with a 30% ROI, right? 30% across the 4 ways to win with real estate, which we talk about in other videos. 30% ROI, and you went 50-50 partners, you would get a 15% and they would get a 15% ROI on their money. A lot of people out there today love a 15% ROI on their money for not doing anything, fully secured by real estate. That seems like a pretty good deal if you got your money in the stock market at 6 to 7 to 2% or in other places. So this is generally how the JV partnership works, the joint venture partnership works, when you are raising money through private equity like this. So to answer your question, how do you get started with little to no capital in any market, is you're going to bring a bit of value to the deal. You're going to have a passive investor that's going to bring their value, in this case is capital, to the deal. You're going to come together and you are going to execute a transaction with an exit strategy clearly in mind, whether it's flipping a property or if it's cash flowing the property, whatever you decide on your exit strategy and the strategy of the deal, this is how you get funding for the deal. So I want to hear from you in the comments below. Was this helpful? I want to hear from everyone out there. Have you raised money through private equity, through joint venture partners? Is there anything that I missed that we should know about? Is there anything that we can do a little bit differently? Or is there any other type of value that a viewer can add to the deal to ensure that we can raise money for 1, 2, 3, 10, or 20 deals? So hopefully this is helpful. I can't wait to read your comments, and we'll talk soon in a future video.